But focus for this is going to be about how to get in, how to use the price action, how to use the slowing down in price action to give you that entry, to give you that clue as to where you can then get in on a secondary move. So what I'll do is I'll start it off. We'll look at how the market moves on that first reaction, and then we'll also look at where you can get back in. And the key thing here is not to rush yourself. It feels like you should rush on a lot of these type of events because the market suddenly gets a lot quicker than it was. But that's the point that catches people out. That's where you end up starting selling the low or chasing a market as it starts to move. Whereas if you can sit back a little bit, observe what's happening, then you can get in on a trade that allows you to sort of sustain a move to the downside. So let's play this. It starts off a little bit slow, and then we get the news, and you'll see when we get the news, you'll see this euro jump, you'll see the Bund fall, because this is a hawkish type piece of news. So we're just waiting a little bit for it. Now it starts. See the euro starting to go. Bund started to tick down, not that quickly, so you could be in reasonably quick at 45. Remember, we started up at 49.50. And think to always remember is where you're starting off. If you're watching the euro is still continuing. I've got the charts here. This is the euro chart, this is the Bund chart. So euro keeps going. That allows you to stay in the Bund. Certainly whilst watching that euro go. Where's your lows from the previous day? Down at 27. Euro keeps going, so euro is now up towards 25s, getting a little bit of a pullback. Bund's held current day's low, held that previous day's low at 24. Seems a reasonably sensible place to be holding, and now the euro starts to drop back. This is where you now need to start thinking to yourself, okay, well, where can I get in? What have I got to see to get myself in this? We start drifting back up a little bit. We're still seeing the euro going high, yet the Bund is still ticking back up. And you notice we've not seen any rotation down in the Bund. All the time, Bund just keeps bidding back up. Euro's now back towards the highs though. Now we trade 34s, trades through 34s, trades 35. The offer comes straight back. That's your little bit of a clue there. As soon as that offer comes back from 35, that's now saying to you that we are managing to find a bit of resistance. The market slowed down that buying. Yeah, on the way up, it was just buy, bid, buy, bid, buy, bid. Whereas as we got up to 35, straight away they took it through 35 and it went straight back on the offer. Euro's still up, sitting at its highs as well, so this is extra reason to be confident in the Bund. We're back down towards the previous day's low. So this is where, now that we're through 27s, through 24s, you can start looking at this for a continuation. Start looking at it, remembering that you've got your targets down towards 8s. Now we get a quicker push in the Bund. And you see, once again, as soon as it went bid up to 18s, market held. And so this is where you could even have a go at an additional short, because this is the point through 18s, the market sort of pushed. As it came back up, the selling remained. So it holds 18s, holds 19s. You've got this low volume node here, trading around 20s. That offers you a little bit of resistance as well. Trade, hold 20s. Yes, I do think you should be a little bit nervous on this trade now. 24s is going to be your key point. That's back into the previous day's range. And again, a bit like up at 35s, we're slowing down at 24s. Euro's still back on its high, so again, you can now start thinking you could have your stops up above 24, 25. If we get back through 18s, that's the point where you can now be confident to hold on to this. So we've tested back to 24s and held it. Euro continues higher at the same time as well. So this is what allows you to stay in that move. But the crucial bit was, as the Bund bounced back up, it ran out of energy around 33 to 35 area. At that point, the euro was already pushing higher as well. So with that euro going higher, the Bund coming back up and holding a level, that allows you then to look at what's going on. Correlated market, the euro. You can look at that and say to yourself, okay, I do feel that the Bund has still got more legs in this. This is a rather hawkish comment. Now you can start looking to get an entry in. You've got a target towards 24s to start with. You can then start thinking about where your next targets are. 08 and then double O's is your main target to the downside, which this does take a little bit of time to get down to. It takes 1, 2, 3, 4, 5, 6 minutes to get down to those double O's, but we've seen on each bounce it consistently holds a lower level. You know, we bounced up to 24, held, dropped down, we then hold below 21, so you can then start thinking, right, we shouldn't now be moving any higher than 21s. Start coming off. Once again, we're down towards 12s, 13s. Euro stays at the high. So now it's a case of holding on to that conviction. 8s should get traded out here because it's a previous close. It's a target area that you would be looking for. We trade 9s. Now we trade 8s, so you can start getting out of some of the position there. Then you're looking down towards double O's and 01s for the main part of your position to get out of the trade. And this then comes down to all about holding your conviction on where the move can get to. You're using a bit of price action, you're using the information the market's giving you to hold you in the trade, but crucially you do need to have those targets in as well. So we found ourselves an entry up at 33s. After that first drop down to 24s, drift back up, find some more selling. From then on, you're watching the consistent bounces to lower prices as the market comes off, and this is what can keep you in the trade. Keep your targets in mind, and that way you're able to then hold on for that bigger target. In fact, we don't get down to 01s until we've had a pullback all the way up towards 23, 24 once again, which is the 38%, the 38 Fibonacci retracement level. We then, on a secondary move, get down towards those double O's. So this is one that does very much take its time, but by using knowledge of the levels you have, by using the price action as we get that pullback, it allows you in at a good price. If you got in early, if you'd managed to get yourself in up around, you know, the high 40s, that move back to 35 was an opportunity to add to the trade. It wasn't an opportunity to rush out. And that often happens, that you get that first fast move down, it starts to bounce, and as it starts coming back up quicker, people start panicking out, and it's that panic out that causes that buying up towards 35 that then runs out. And once that buying runs out, that's where we then start to have that secondary move as other participants start coming in and realise that actually there is more to this than merely a short-term bounce. It is not a bounce for the bigger move, it's a bounce catching out people who've got short and then trying to take their money off the table.